Welcome back. Now let's take a look at how this market has performed. It certainly has been topsy-turvy for the most part. Asia was slightly negative to start the day off, but things did get slightly better for some of the indices a little bit earlier on. But unfortunately, closing still in red territory across the board there for all of those markets in Asia in particular. Taking a look at Europe as well, following through on that negativity from Asia, then going down as well. All of those markets in Europe also headed lower. Following yesterday's bright spark of more than 1%, unfortunately, the JSE All Shares not to be. It also fell 0.75% down in this lunchtime trade. So that picture not looking too good. A big fall there for the Foschini Group following a few days of gains, of course, following the announcement that they would be buying jet stores. So that has meant that that share price has gone up quite a lot. But today, falling off ever so slightly. The banking shares, though, managing to tick up more than 2%. They've been laggers of the market so far this year, around 30% down, in fact, year to date. So big fallers on that front, with the industrials also, unfortunately, not enjoying a good trading day, more than 2% weaker. Onto the commodities board, it's all red here as well, with the Brent crude price going down. We have gotten word out of OPEC and its members that they will indeed be easing their production cuts. So they had cut production by 9.7 million barrels per day. That figure drops to 7.7 million barrels per day that they're going to be cutting in terms of their production and supply to the market. So we are getting some of that news there. Platinum, though, headed down as well, unfortunately, $826 a fine ounce, with gold still sitting above 1,800, though. It is down 0.25% this afternoon. Quick look at the currencies then. Slight weakness for the local currency at 16 Rand 66 against the US dollar. It's 18.99 though for a euro, and a pound will cost you 20 Rand and 89 cents. Let's bring Viv Govender into this conversation then and unpack this picture just a little bit more. Viv, thank you so much for the time. It's been very interesting. The market goes up one day and down the next day. It's almost as if it's going to synchronize the seesaw movement.
I think what's happened is we had that big fall in March, and then since then we've recovered quite strongly. But the market, I think, doesn't have a belief that things are back, strong enough to actually go above the start of the year highs effectively. So we kind of like just hovering. I think international markets are hovering just below where the start of the year was, not the year high, but the start of the year was. And I think this level is kind of the place where people are sitting right now thinking, things are not going to totally fall apart, at least internationally, but we're not yet comfortable enough to like try and establish new highs in a market that's basically this uncertain.
Look, we've gotten the likes of the Nasdaq going to the all-time highs as well, right? So that continues to be, but that's based on the tech stocks, right? So they've done really, really well, and they continue to do well despite today being a bad day. If we speak about the international markets, then you see the banking stocks start to come out with their quarterly numbers. Goldman Sachs also reporting late in the day yesterday. What have you made so far of what has come out, particularly those banking stocks?
I think very split. JP Morgan quite good, Wells Fargo quite bad, and it's a bit of a split kind of thing depending on where you're basically situated. I think JP Morgan did very well with its investment banking division. I think Wells Fargo had more consumer facing loans that were looking a bit tough. I think looking at the market at the moment, if you're facing the consumer, if you have mortgages, if you have consumer debt, you're going to be having quite a bit of difficulty. If you have a lot more investment banking operations where you are basically sitting around doing mergers and acquisitions and trying to raise funds and that kind of stuff, you're probably going to find things a bit more active. If you have a trading division that basically picked the things right in this particular time, because big moves allow you for big profits, you could be doing very well or very badly depending on how things go.
Yeah, it also does depend. I wanted to get into the retail space. Now, earlier this week we had the Foschini Group make that announcement of jet stores. But then later on this week we have another retailer who unfortunately is struggling along, and that's Truworths. And they're saying that 20% of their customers unfortunately cannot pay their debts. 75% of their customers, of course, buy on credit, right? So that it kind of hurts their business when you have 20% of them saying they actually cannot pay, and it's a difficult time with COVID-19 in the mix.
Yeah, I just saw a survey. I think it's called the CRAM survey, the COVID rapid, what you call this mobile survey or something like that. It's by one of the well-known, survey house. And they were talking about the fact that they have seen like a number of people increasing hunger levels. So the actual amount of people that are saying that they were hungry in the last 7 days has gone up. And scary enough, they're talking about the fact that the ability to shield children. So normally adults go hungry in the household, but the child child won't, because the adult can shield the child, is actually being reduced, which is a scary thing. When you can't even feed your child, people go hungry not to feed themselves. And you can imagine how that translates over to the retail sector that serves the same populations. It's going to be very difficult in this environment here. They're talking about 3 million people possibly losing some form of income in the last couple of months, which is, considering the fact there's only about 17 or 16 million people with jobs of any form in this country, that's a huge loss. Any sector that depends on the consumer at this moment, be it the banking sector or be it the retail sector, is going to be finding it very difficult. The one thing we have to note, of course, is also internationally, we are seeing, talking about the tech, is a shift from land to the cloud, basically. People are losing money on the land-based retailers, but the cloud-based retailers are going to do really well in this scenario.
Sure. Gets very interesting, especially on that tech count, as you made note of then as well. Very quickly, that oil price as well now. Look, it seems to be hanging around at that $43.50 a barrel. But with OPEC having announced that they're going to ease up on their supply cut, one would have thought that means you're putting more into the market and that price would have fallen even more. But it's not to be, actually.
Yeah, I think what OPEC is trying to do is trying to basically not raise prices to a level where they bring back the shale operators in the US back to profitability. So this is when they did try this before, they dropped oil prices right dramatically to hurt the shale operators. The last thing they want to do is basically jump up oil prices because they cut production in order to give a lifeline over to the shale operators, which I think become profitable starting around $50 a barrel or $60 a barrel, around about that range. So holding it in the 40s is probably a good thing for them in the short term. But in the long term, they can't afford to do that because most of these countries basically require oil prices that are significantly higher, $60 a barrel. I think the Saudis require something around the $80 a barrel level. I think the Russians are okay at $50, $60 a barrel. But some place like Nigeria, to balance that budget, they need oil well in excess of $100 a barrel.
Yeah, and it's certainly hurting for them to currently have the oil price at these levels. Do you think it then, for the long term, do you think OPEC sort of sits back and says, well, at some point we're going to have to make a plan here to try and boost that price up? Do you think they pick the price up from where it sits? And what is that long-term figure maybe?
Yeah, look, I think if they can take out the shale operators and basically make it much riskier for them to operate, either by basically strangling prices right now and getting them out of business in the short term and really hurting their funders as well, which is a big thing in the US where the guys that are funding them have been facing real losses, that could cause oil prices to be significantly higher above where we would expect them to be for the foreseeable future. If, however, the shale operators can survive it, we're probably going to return to the same $50, $60, $70 a barrel level.
All right. Well, this market picture gets very interesting. It is a Thursday, though. Not yet over, but it certainly is looking very red for now. That is the market picture. Thank you so much there to Viv Govender from Rand Swiss joining us to help unpack that market picture just a little bit more. Of course, even gotten news as well out of the South African Reserve Bank with regards to foreign direct investment into the country, that rising to 29 billion in the first quarter of 2020. Of course, that figure is probably going to fall off quite significantly when it comes to the second quarter as well because of COVID-19 and its impact on the economy. So that 29 billion, don't hold that too fastly as well. We are headed into next week where the South African Reserve Bank is also expected to make a decision when it comes to interest rates. With that inflation number going down to 2.1%, will they cut again by another 25 basis points? It is possible, but what is the benefit? Is the pass-through going through to consumers at this time is perhaps the big question. All of those will be answered soon enough, though. But the questions around South Africa's labor force, as well as how to get into alternative investing and the private equity space, is what we'll be talking about right after this break. My colleagues Mbongeni Mutwa as well as Nastasia Arendse are standing by. From us here at the Johannesburg Stock Exchange, though, it is goodbye. We'll join you again tomorrow. From us, that's where the buck stops.